Hello. Okay, so last time we tried this didn't go so well. Um, Let me know if you can hear me. Let me know if you can hear the audio before I start this again. A late start today. I do realize that. Okay, let's see how far this goes. So, I want to welcome you all again. Remember, happy Monday. Happy May 1st. I hope everyone's doing well. Realistically, today, what did want to talk about is we do have the Fed week coming out on Wednesday, May 3rd. So we're going to be trading that live with our trading room. We do also have NFP non-farms, which come out on Friday. And today I want to break down what's going on. We had a lot of big tech earnings that came out last this week. With the anticipated news that comes out midweek into later of the week, I don't necessarily anticipate that we do get a lot of movement and reactivity until we get a lot of those announcements that come out midweek. I think lower volume overall, and we could start the week off with a slight bit of a pullback. And I'm going to talk to you guys about why that is the case. But overall, last week, some financials reported earnings, which the main one, FRC, which is now the third massive regional bank that is set to collapse. Right, so this is a lot of the news that came out after we saw the collapse in March of Silicon Valley and the signature banks. We have the Federal Deposit Insurance Corporation that has appointed the receiver of the accepted bid, JP Morgan, right? JP Morgan, which is something that I was talking about earlier in the past few weeks, that a lot of the big banks are probably going to look to overtake those smaller banks, which leads me to believe that those are going to be decent areas of decent stocks naturally to pick up. JP Morgan up about 3% here pre-market to about $142 a share, while FRC is down 43% here pre-market. So JP Morgan is to assume all deposits, including uninsured deposits and substantially all the assets that First Republic has, which includes a $173 billion loan and about $30 billion in securities. Although it won't assume all of First Republic's corporate debt or preferred stock. In terms of the fine print, we have JP Morgan CEO Jamie Dimon talking a few things, and he says our government invited us and others to step up as we did, and our financial strength, capabilities, and business model do allow us to develop a bid to execute the transaction in a way to minimize costs to the deposit insurance fund, which is estimated about $13 billion. To minimize costs to the deposit, the FDIC will also enter a loss sharing agreement with JP Morgan on single family residential and commercial loans and provide $50 billion in financing to the bank, while JP Morgan is set to realize a one-time $2.6 billion gain from the deal, but expects to spend $2 billion on reconstructing the costs over the next 18 months. So what a freaking deal for JP Morgan, right? They're coming out on top yet again as big banks look to kind of monopolize a lot of this industry in the States. So huge wild ride for First Republic. It's been teetering on the brink of failure for about 2 months now, and the bank's business model, which funded cheap mortgages to wealthy clients from little to zero interest deposits, got hammered when rates rose rapidly. So clients then panicked, and the majority paper losses from its long-dated assets. So last week, First Republic revealed the deposit outflows about $70 billion in Q1 based on the earnings, and put the spotlight on Wall Street institutions that deposited $30 billion at the bank on March 16th to stave off additional fallout to the industry. So, right, this might be the third of many, realistically, of the regional banks that are falling apart, right? This financial crisis does continue to elaborate, but it doesn't seem like the market's full set in panic mode because we do have big tech earnings that are still sustaining this. A lot of the upside is being sustained by the tech industry, as we've seen. So that's one of the main things that I did want to talk about today. There's not too much else as we ease into the remainder of the week, where we have the Federal Reserve that comes out with a 25 basis point hike expected, and that leads into probably the final hike that, if I said cut, I meant hike. The final hike that we're probably going to see this year, with the expectation of a 50 basis point cut by the end of the year. So I don't know how that's going to pan out, but we're going to be trading that live in our trading room to come forth. Realistically, there's a lot of upside pressure in this market. I foresee somewhat of a pullback coming out here at the beginning of the Monday session, and probably getting a rebid into the Federal Reserve meeting minutes, along with maybe some sideways action on some low volume. Today we have PMI manufacturing index at 9:45 Eastern time, ISM manufacturing index, and construction spending in terms of the economic calendar. When we talk about where the market is going, what the market looks like. I talked about some gamma resistance, some gamma ledges on the overall market that sit at key resistance. So on S&P 500 futures, 4196 is a huge gamma area where market makers are looking to defend that region. So above that region, they're going to have to start hedging positions, meaning that we could see a decent pop above that area. So I'm leaning to see if we can present some downside from that region, which would lead me to believe that we would probably see, I say on the low end, 4160s, right? Low 60s to see if we can get a bounce. There are some areas that I do want to see us attempt to buy the dip, right? Which I posted in our trading room last night, actually, the 82 area for that long to see if we can get that anticipated move to the upside. But if we do break that pivot, 72 to the downside and 62 are going to be huge, huge areas I'm going to be watching and targeting. I think it's going to be a little difficult to just start rallying off the open. I think the first attempted move might be to the downside before we do pick up those bids. So that's how I'm just trying to play this again, looking at the pivot at 41.80, 82, and that's about it. Again, I apologize for the technical difficulties today. We have some more earnings that come out this week that we're going to be watching, and I'm going to be updating you guys here on this morning market update, as well as a Federal Reserve. The closer we inch to that, the more info we'll have. So I do want to remain fairly bullish into the end of this week, but I don't think it comes with just upside, just continuation through a lot of these resistance points. I think that there is a lot of upside in tech. We just have to be cautious about some pullbacks to get new, big, strong-handed buyers to take in. So I hope everyone has an amazing trading day. Check us out at community.tradeproacademy.com. I'll see you guys there, and we're going to be opening our live futures room right about now. I'm going to be jumping into that, so I hope to see you guys there. Check out that tradeproacademy.com. And happy trading, happy Monday. Stay diligent. We're going to be low volume until the Fed most likely, and then we're going to start to see that ramp up ideally. So thank you and take care. I'll see you guys tomorrow for another update.